Welcome back to another episode of your weekly Crypto Pulse, where we cut through the noise and bring you the most important updates from the blockchain universe. This week, it's one for the books. From a massive shift in U.S. public opinion on gold and Bitcoin to major movements in ETFs and bold price forecasts that could shake the market. Whether you're a long-term hodler or just jumped in this cycle, this episode is packed with insight. So buckle up, let's decode the week together. 80% of Americans want to replace gold with Bitcoin. A new poll is making major waves. A staggering 80% of Americans now support converting U.S. gold reserves into Bitcoin. Think about that. Gold has long been the ultimate safe haven, but for most of the public, it's starting to feel outdated. The findings suggest a generational and philosophical shift. Bitcoin's fixed supply, transparency, and digital nature are clearly resonating in an era where people distrust centralized monetary systems. While this doesn't mean Washington is about to load up cold wallets with BTC, it does indicate something deeper. The store of value narrative is evolving. Gold's 5,000-year reign may be coming to an end, replaced by the digital gold of the future. JPMorgan inches toward Bitcoin ETF access. Now to the big banks. According to multiple sources, JPMorgan is preparing to offer its clients access to Bitcoin ETFs, marking a major turning point for institutional adoption. Just a few years ago, Jamie Dimon and the JPM team dismissed Bitcoin outright. Today, they're adjusting internal compliance measures to meet client demand. This isn't about belief, it's about business. And with the surge in ETF trading volumes and competitive pressure from firms like BlackRock and Fidelity, JPMorgan can't afford to stay on the sidelines. If this opens the floodgates for legacy clients, it could push Bitcoin even further into the mainstream financial ecosystem. SEC delays Solana ETF over manipulation concerns. Meanwhile, on the regulatory front, the SEC has once again delayed its decision on Solana ETF applications. Sound familiar? This was the same excuse used to block Bitcoin ETFs for nearly a decade. The crypto community isn't surprised, but they are frustrated. Solana has made massive strides in ecosystem growth, stability, and DeFi adoption. Investor demand is growing, and yet the SEC continues to apply unclear, slow-moving frameworks. The delay raises questions. Is the agency truly protecting investors or simply dragging its feet? Either way, the pressure is mounting for clearer, faster regulatory decisions as crypto demand grows. Bitcoin hits highest weekly close, IZATH. Bitcoin has just posted its highest weekly close in months, sitting right near its all-time high. It's a huge psychological and technical moment. After weeks of bouncing between resistance zones, this close gives bulls renewed momentum. Institutional demand is growing, ETF inflows are back on the rise, and on-chain metrics show whales accumulating again. Add to that the recent halving, and you've got a perfect storm brewing. If price breaks out from here, we may not just revisit the old highs, we could establish new ones. Analysts are already calling for parabolic setups. Strap in. The real fireworks may just be getting started. $110,000 Bitcoin on the horizon? Analysts say yes. Let's talk predictions. Some top analysts are now forecasting Bitcoin at $110,000 in the near future. While that number might sound wild, the logic behind it isn't. With increasing scarcity, macroeconomic instability, and high-profile institutional entries, Bitcoin is positioned to surge. Post-halving cycles historically show huge growth. And with fiat currencies under pressure globally, Bitcoin is becoming a hedge, not just for individuals, but for nations and institutions. Of course, the road won't be straight, but the signals are aligning for a breakout unlike anything we've seen before. $110,000 might not be the end, it could just be the beginning. That wraps up this week's episode, where we saw major shifts in sentiment, big institutional moves, regulatory roadblocks, and a market gearing up for liftoff. Whether you're dollar cost averaging or waiting to pounce, this is a time for vigilance, strategy, and a long-term vision. If you found this breakdown useful, hit like, share with your crew, and subscribe for more weekly deep dives. Until next time, stay focused, stay skeptical, and stay bullish.